Hello and welcome to the CNBC-TV18's Mumbai studio. I'm Sonal Bhutra and with me is Pavithra Parekh. You are watching MF Corner. Well, 2023 has been nothing but positive cues across the board. We've seen central banks also globally pointing at a pause in interest rates. We have spoken about market hitting new highs in the last 3 months. So as we begin the year on a strong footing with the market reaching new highs and also an indication of rate cuts, how do we see mutual fund investing from here on? How do the investors set their sights on the market? Which funds are the best to invest into right now? Because there's so many segments, so a lot to talk about.
Oh, absolutely. So let's get in our guests and really understand where we should be putting in the money. We have Kailash Kulkarni, Chief Executive Officer at HSBC Asset Management, joining us. Mr. Kulkarni, thanks a lot for joining us and taking the time today. You know, like Sonal was pointing out, we're at a point in the markets where it seems like a bit of a Goldilocks scenario, right? Everything is lined up well. There is this possibility of interest rate cuts in 2024. Looks like the Fed might cut 3 times over. But we also have that big center election as an event to watch. So what do you make of 2024 when it comes to MF investing? And if someone is just getting in now, what would your advice to them be?
So thanks for having me over, and I can share the sentiment with you. It's been a wonderful period, 2023, and I think looking forward to, it's a great foundation that has been laid for 2024. Yes, there are possibilities of a rate cut in India. Possibly it's going to be from the second half of 2024. But if you look at the global interest rate trajectory as well as the outcome of the election, that's going to keep markets quite volatile in the near term. However, fundamentally, things seem to be completely in control. India is doing much better than most of the other countries. And thus, we see a positive side, both on the fixed income as well as on the equity when it comes to the markets.
Okay, so you are seeing positivity both on the equity side and fixed income as well. So in that case, which funds do you think will be in focus? Would it be a good time to look at debt funds? Would it be good to stick with equities?
It's a good time to look at both. So clearly, this is a very unique period, where not just equity and fixed income, but I think because of the global uncertainties, gold will continue to remain strong. But when let's look at it from 2 kinds of investors, a conservative investor and an investor who's willing to take a little higher risk. I think if people want to come in now, especially with the elevated valuations on the mid and small cap space in equities, it would be better to be in more multi-cap or flexi-cap kind of products as you go along, or a first-time investor can come in through index funds or hybrid funds like Balanced Advantage or equity hybrid funds that are there, or equity savings fund. I think another category which is really going to do well this year is going to be the arbitrage category. I think that's a category which few people have entered in terms of individual. A lot of corporates do park their money, but it's a category which has really done very well in this last 1 year, and we continue to expect it to do well. On the fixed income side, I think people have been only parking their money in the extremely short end space. And I think now they'll start moving to the 3 to 5 year time horizon that we are looking at in terms of duration funds. So clearly the medium duration, mid to long term duration funds are something which will find flavor with the investors as we go ahead. For those who are typically traditionally parked in fixed income kind of return instruments, they may find this to be attractive because along with the higher yields that these products already have or are carrying, there's a significant amount of chance to get the capital gains over the next 2 to 3 years as the interest rates start to pair off.
Okay, that's very helpful and, really gives us some pockets that any investor could look at right now for 2024 and the years to come as well. But Mr. Kulkarni, let me give you 2 scenarios. A, you have a conservative investor and you have a high-risk investor. What would you recommend in terms of how they should shape their portfolios? 2023 also saw some of those big bets in terms of mid-caps, small caps. Do you think there needs to be a material change from that now?
Yes, I think so, because if you look at conservative investors or even first-time investors who are entering the market today, I think a couple of things are very important. If you are looking at equity as an asset class, looking at the previous track record, one has to understand that volatility will remain. And we would rather have people a conservative investor park their money in equity savings fund, dynamic funds, or maybe the broader index fund, not the thematic index funds, but the broader index funds which are there. But an investor who's willing to take more risk, I think they can continue to be invested in small and mid cap. You don't need to get out of that space because clearly, these are asset classes or these are caps which really do well when the economy is doing very well, and that should continue, but with higher amount of volatility. And that's where we keep talking about diversifying it a little into a mid and large cap category or a flexi or a multi-cap category as depending on the risk profile of the investor. So some amount of money needs to move towards the larger cap space and not the entire basket being towards the small and mid cap space is what we believe they should do. Many of the conservative investors have a lot of money currently lying in different kinds of fixed income products. And I think in that context, they moving even into arbitrage is something that is good for them.
Okay, all right. So that is again a very helpful distinction between the two classes of investors. Last question before we let you go. What do you make of multi-asset funds? Do you think that is somewhere where a new investor should start? They can take exposure to everything.
Yeah, so, multi-asset fund by nature, because, at different points of time, different asset classes do better than the other. And hence, what you're trying to do is if the fund manager's got his bets right, he would have a high exposure to equity or debt or gold. And I think this is a very good product for a investor who's starting. Because one, he's getting exposure to different asset classes. Second is his risk is quite controlled from that perspective. And like I said at the start, it's very unique situation we are in, wherein equity, debt, and gold are expected to do well this year. So getting into a multi-asset kind of category is surely helpful for a first-time investor or a conservative investor because he gets best of all the three worlds.
Okay, that's definitely, helpful. And Mr. Kulkarni, we're going to leave it there today. But thanks a lot for joining us and taking us through this conversation. We've been speaking to, a whole host of guests on where we could invest as far as the market goes. But it's helpful to know where to invest in and the funds to pick as well at a time like this. Thanks for joining us. We do need to get into a short break. But on the other side, we're going to get you a conversation on debt funds, the subcategories that you can look at right now. We have Kalpesh Asher of Full Circle Financial Planners joining us to take that conversation. Stay tuned.